Hey docs, happy 5 Minute Friday. Dr. Holly here from chironumbers.com. This week we are looking at a balance sheet. So I'm going to explain to you first why you would want to look at a balance sheet, and we will look at a real life one that has been pulled from QuickBooks software. Balance sheets are just a snapshot in time. You essentially just put in one date and it's going to give you essentially the balances of everything that's on the books in your business. So assets, liabilities, equity. Okay, that's what we're looking at. And it should balance at the end of the sheet. Okay, so we're going to be looking at any cash on hand. That's where your assets are going to be, any major equipment, or other like property type of assets that are going to be there, will be listed. You will have any sort of inventory sort of things, again, because those are seen as things that could be turned into liquid or cash assets. Okay, and then we're going to have liabilities and equity. So liabilities, any short-term, long-term debt, credit cards, loans, etc., lines of credit, payables, so your AP and your AR, accounts receivable, accounts payable will also be listed there if you use your software to track that. Now, most of the time I find that service providers have a separate software that manages their accounts receivable. So like your patient balances, collections, etc., your billing software has all that. That won't actually be over in your QuickBooks software. And then you may or may not use the accounts payable function to pay out things that you owe. Okay. So again, and then the equity. So that's going to be any infusion of cash or a startup investment, anything like that, that you put into the business. And then what you take back out of the business as you take draws off. Again, this is all going to be sort of determined as what the business entity that you have on the cadence of how that happens specifically, but all of that will be listed on your balance sheet. So let's look at one. Okay, so here's an example of one where again, we have total assets on one side. Usually these are stacked on top of each other, but I just blew them up so you could see them a little better. So for this practice, we have, this is before a profit first type of implementation. So we've got multiple checking and savings accounts here. So we've got those balances there. You've got accounts receivable. So this practice did use some sort of invoicing function within the software to send statements out to be collected on. You've got an inventory asset, okay, and then we have what are called fixed assets. So furniture and equipment, it's very intuitive, okay? So my goal is when you pull these reports or when these reports are sent to you by your financial professionals, your bookkeeper, or your CPA, whatever, that they are labeled so that you can actually read them and you actually know, hey, I kind of know what that is, or I don't know what that is, so let's try to figure it out, okay? So furniture and equipment, medical equipment, accumulated depreciation, computers, leasehold improvements. So leasehold improvement, if you lease a space and you make improvements to it, you have to, make that capital investment. That'll be listed here on your balance sheet as an asset. Computers, et cetera, those are pretty self-explanatory. Accumulated depreciation, that's like when you buy one of these large assets, we don't take that as like a tax write-off like at the moment of purchase. We usually realize that over a period of time, whether it's 3, 5, 10 years. And so that will be categorized here as well. All right. And then on the flip side, we're looking at liabilities and equity. Okay, so for this practice, we've got a credit card, we've got sales tax. So as if you sell inventory, you have to collect sales tax per your state. You have to, essentially escrow those funds until you remit them to the state. So that's there. This practice has a payroll, has a staff. So again, you have those payroll taxes where you're withholding that from your employees, and then you have to send it to the state, to the federal government at a certain period of time. And then we have a loan here that's on the books. Okay, so that's all the liabilities added up together. And then we look at your equity. So again, we have equity, we have draw, and then we have your net income. So your net income, actually, should be the same exact number that comes over from your profit and loss statement. Okay, so this practice for this year did have a profit at whatever period of time, snapshot in time, whatever day this report was pulled, it was showing a net income, a profit of $7,000. Okay, so it's supposed to balance out. I say that and I look at these numbers and I see 69,102, 69,229. I don't know what happened to the other $127. But believe you me that it is supposed to be balanced out. That's why it's called a balance sheet. Okay. So I really want to encourage you to look at these reports, to look at them on a regular basis, and to make sure that they are set up in a way that you can read them and you at least know what's going on, or you know what questions to ask. Okay, so just a little extra tidbit. I had been putting off opening up another account. In Profit First, we say, if in doubt, open an account. And so I needed to open up just one more account that I really need to save some money for a specific thing. And it just, because this has been so ingrained in my mind, it's really just easier for me if I just make a designated account and set that money in there, okay? Rather than having it sit somewhere and sort of artificially inflate on one of my other accounts. So I've been putting it off. I didn't want to go to the bank, da da da. Well, you know what? Today I thought, let me just call them real quick. So I called them, verified my identity. She said, okay, I got it open. So the phone call literally took less than 2 minutes. So I encourage you to just rip the Band-Aid off and make the phone call. Now, I'm not saying it's going to be that easy if you have to go to a new financial institution or if you don't already have accounts set up. I apparently just had a really good experience, with the financial institution that I'm at. I'm at a local credit union. I do highly recommend using local credit unions because I've always had really great service and low to no fees. So that is my spiel for today. 6 Minute Friday, right on time. Have a good weekend, everybody.